Good day, guys. How you doing this fine evening? Welcome to my channel, Quality Mindset. Today we'll be doing 2019 cost and management accounting and 5. So we'll be taking off from the previous questions. We'll be starting with question 4. So question 4.1, prepare production cost statement for the year ended on 28 February 2017. Sorry about that. So basically the production statement, cost statement, similar to what we've been doing on question 2. Just that it's no longer in a ledger form, we're doing a statement form. So it's the same thing, but the only difference is the format. So we're no longer doing ledgers, we're doing a statement, similar to balance sheet, bank statement, income statement, yeah, you know your statements. So the main issue for this is that how do we do our income statement, our production cost statement, sorry about that, our income statement. So our cost production statement, direct material plus direct labor equals to prime cost, right? Prime cost plus manufacturing overheads equals to total production cost. Total production cost adding, let me fix here, you add work in process opening less work in process closing, which will give us equals to cost of production cost of production of finished goods. So guys, this is the calculation of your production cost statement. This is how you're gonna do it. You can start with direct labor, calculate direct material, calculate direct labor, add them up, get your prime cost, add manufacturing overheads, total production cost, you get your total cost production cost, you add your working process, you add your working process, you less your working process closing, you get cost of production for finished goods. So it's not off, it's for finished goods, so without further ado, let's start typing our question paper. So direct material, let's get some information. So here we have information. Shit, doesn't work. So here we have information. We have material control, opening stock, material control, closing stock. So which is 12,000, 14,000. So we'll take direct material. We're calculating direct material right now. So let's say opening stock. Guys, this is similar to the ledgers. There's nothing different. Just have to do it in the statement form. Opening stock, which is 12,000. Then we get more information about direct materials. So we have material purchase from creditors. We have okay, so we have materials. Okay, so we're adding materials. Which purchases? We're adding purchases. Any purchases, which is creditors control, because we purchased on credit. Get your purchases, which is 154,000. 154,000. So we continue to say we add. So since we have these two, we add these two. They give us that's the beautiful thing about Excel. You just get your computer to calculate for you. So we add these two, they give us 160,000, 166,000. Then we less our closing stock. We less our closing stock, which is 14,000. Guys, if you're still wondering where we get our closing stock, here it is. Here 14,000. Material control, opening stock 12,000. This is where we got the information. So we'll be moving on. So we have a closing stock. So our direct material is cost to, not sorry about that, it's cost to opening stock. Now we already calculate this one. It's cost to opening stock plus purchases less, so we're gonna say plus since here it's negative already. So our direct materials is 152,000. So which is opening stock plus purchases is cost to material available less closing stock, which will give us 152,000 for direct material. Then we're moving on to direct labor. Direct labor. Labor. Okay, so we have our direct labor. It's given factory direct wages paid 189,000. Guys, this is free marks. This is a free mark. Direct labor 189,000. So there you have it. Now we're calculating our prime cost. I'll fix this one. Now calculating our prime cost. What am I doing? Let me fix it real fast and stop being lazy. 189,000. Yes, now we have our prime cost, and our prime cost will be equals to labor plus this plus this, and then we have it. This is how easy we get our prime cost. It's only direct labor plus direct material, you get your prime cost. So we can move on from now if everybody understands. So now we'll be calculating manufacturing overheads. Guys, like I explained before, manufacturing overheads is all payments that are for the factory but not directly involved in the manufacturing of the products. There is manufacturing overheads, which is depreciation on manufacturing equipment, depreciation on factory equipment is depreciation, not depreciation, rent, which is insurance, electricity for the machines to run, indirect labor. We need cleaners to clean every single day. We can't produce, let's say for example, bread on a dairy farm. Guys, this is how it works. Manufacturing overheads, so it's manufacturing overheads recovered. So guys, this is a bit tricky. So if you check here, they're giving you manufacturing overheads recovered, so which is 105,000. But this is a trick, guys. It's trick. You have to calculate your manufacturing overheads by yourself. Understand me, guys? You have to calculate your manufacturing overheads by yourself so that you can understand, so that you can get confirmation that this is actually the manufacturing overheads recovered. So we'll start with factory for rent. Factory rent, which is 26,000. It's 26,000. So right now we're just confirming our manufacturing overheads recovered. So we have factory for electricity paid, factory electricity, factory electricity, which is 22,000. Which is 22,000. We have indirect wages, indirect salary, which is salary paid to the factory supervisor. Sometimes they just say salary paid to the foreman. So indirect labor, I don't even know how to spell indirect. Wow, shocker. Indirect labor, which is 38,000. So now, guys, indirect material of the factory, indirect material. Guys, I'll be honest, I'm not very sure what they mean about when they say indirect material. I'm not sure what they mean. I can't give you a proper example, but I'll get back to you on that. Indirect material, which is 10,000. But I'm assuming it's brooms and stuff. They're not directly involved, but they're used in the process of cleaning. machines, brooms, feather dusters, I don't know what else. I'm not really sure on that one. So we go for depreciation. So if you check here, we have factory equipment, which says cost price was 14,000 and it depreciated about, okay, so cost price, opening balance for the cost price was 14,000, the opening balance for 1 March 2016 was 12,000. So if it's diminishing method, it means this thing okay, so let me write it down for you. I'm sorry about that. I'm calculating depreciation. Sorry about this, guys. I'm having troubles with my camera, but I think I got it working again. Okay, so where were we? Depreciation. Okay, guys, factory equipment cost price 14,000, right? We have March, which factory equipment was worth 12,000. So let me roll it down, roll it down. So it's 14,000. That's 12,000, which will give us 2,000. This is our accumulated depreciation. This is our depreciation, not, yeah, this is our accumulated depreciation. Accumulated depreciation. This is accumulated depreciation. Accumulated depreciation, which will be so now calculating depreciation. Wait, what was the information? Depreciation on factory equipment is 20% of the diminishing balance method. So we know diminishing balance method is cost minus accumulated depreciation. So it's 14,000 less 2,000, which should give us 12,000 multiplied by 20%, which should give us okay, let me calculate that real quick. 2,400. This is our accumulated this is our depreciation, 2,400. So this is our depreciation, 2,400. 24,000. 2,400. So we'll be calculating this amount. So let's go back and check what else falls under. So we already wrote that indirect materials. Okay, I think that's all of it. Okay, guys, if you add up these numbers, 26,000 plus 22,000 plus 38,000 plus 10,000 plus 2,400, they don't add up to 1,500. So this is what we call actual manufacturing overheads. This is what we call actual manufacturing overheads. So we add up this amount, which will be 26,000 plus 22,000 plus 38,000 plus 10,000 plus 2,400, which will be 98,400. This is the actual overheads, and then this is, so we need this amount to get to one. We need this amount to get to 105,000. So to get the difference, we're gonna look at the difference. We're gonna take this amount and less this amount, which should give us 6,600, and this is what we call over recovered overheads, manufacturing overheads. So this is what we call over recovered. I'll explain this whole process in a bit. Over recovered manufacturing overheads. This over recovered manufacturing overheads. So guys, let's get back to 105,000. So what this amount means is that manufacturing overheads recovered. So this is the amount we budgeted for manufacturing overheads. This is the budgeted amount for manufacturing overheads. So basically we had our expenses, we pay the factory rent, pay the factory electricity, indirect labor, indirect material, depreciation, and we got the actual, which is 98,400. So we have our over recovered manufacturing overheads, meaning this is the remaining amount left from the overheads, but it's still part of the overheads. Cause if you budget 2,000 and say this 2,000 I'm gonna spend it on clothes, even if you're left with 500 rand, it's still the money, but you still took it out of your pocket and said this is for clothes. So if you have 2,000 and said, nah, this 2,000 I'm gonna buy my kids lunchbox materials, lunchbox food, like the bologna and stuff, and the cheese and stuff. So that means you already subtracted 2,000 into from your account and saying that this 2,000 is meant for my kids lunchbox materials. I don't know what they called. So yeah, so that's why we're adding over recovered manufacturing overheads. I hope you understand, guys. If you don't understand, just comment down below and I'll make a video. If you like, I'll make a video about the whole manufacturing overheads, actual and actual manufacturing. Just leave a comment down below if you didn't understand. So let's continue, guys. So we have a prime cost. So we take our prime cost, we add our manufacturing overheads, and we get and we get 446,000. This is our total according to our calculations there. This is our total production. Total production costs, total cost production, of production, total cost of production. Total cost of production. So we're so let's continue to say a work in process. We're adding our work in process, opening stock, work in process. We're adding our work in process, opening stock, work in process, which should be 18,000. So we're adding 18,000. Guys, if you can't figure out where I got it, this is in the first information of saying 18,000 work in process. 18,000. We're adding our work in process 18,000. So this should give us sorry about that. 464,000. We're lessing our working process. Let me do this so that not you lots cannot get opening. This is the working process. Come on, this is the working process opening. So we're lessing our working process closing. Closing. Which should give us 26,000. This is our working process closing. Which should give us working processes unfinished goods, guys. Unfinished goods, they sometimes use the term unfinished goods. So for our cost of production finished goods, cost of production let me use full caps. Cost of production is yeah, for cost of production is I'm sorry about that, guys. Just trying to liven up the mood. I know I have a sleepy voice that makes people sleep. 438,000, guys. This is your your cost of your production cost statement. Like I said, guys, similar to what you do in the ledgers, just that is in a statement form. If you remember the ledgers, we have production control. So what do we add on production control? We have our opening balance on production control. We have direct material, direct labor, manufacturing overheads. You close it against your less working process. You close it against finished goods, guys. That's how we done before. If you don't know how to do it, just go back on this video, on this playlist. Just go back on this playlist. There's a video on how to do production control, guys. Thank you. Please leave a like, comment, subscribe. There'll be more videos like this, also for N6 and 5 on all subjects, but except business. On all subjects except business, as you know, guys. Theory, I don't teach theory. Oh, and there's no video on management communication. But if there's a specific topic you want me to do, just leave a comment down below and I'll do it, a specific topic for you. So stay tuned, guys. There's a video for 2020, there's a playlist for 2020, playlist for 2021, playlist 2022, playlist 2023, and hopefully a playlist for 2024.